Bitcoin has been on a tear year to date, up over 80%. The cryptocurrency has held steady around $30,000 for a little over a week, though dipped below $30,000 this morning. Now, crypto took a beating last year following the collapse of FTX and the arrest of the platform's leader, Sam Bankman-Fried. But the price has held steady despite some volatility in the sector this year. The largest crypto platform in the world, Binance, and its founder, Changpeng Zhao, often called CZ, has been in hot water of late, all across the headlines. Now, here in the US, the Binance and CZ have faced probes from the IRS and DOJ, as well as lawsuits from the CFTC and the SEC. Recent suits accuse both of operating illegally in the US, misusing customers' funds, and market manipulation. Well, our next guest just published a report on the whereabouts of CZ, saying the billionaire is currently hunkered down in Dubai as French prosecutors investigate his crypto exchange for alleged money laundering. Joining us now is Bradley Saacks, Semafor finance reporter. Good to have you on, Bradley, and we're going to get to CZ in just a second here, but we're looking at this recent report from the Wall Street Journal about the spot Bitcoin applications recently from BlackRock and Fidelity Investments. The source is there saying that the filings aren't sufficiently clear and comprehensive. We saw Bitcoin tumble on that news, dipped below 30, creeping its way back up. But what does this really mean then in terms of where crypto is right now?
It's a very odd space to be in for the industry because we've seen regulators, especially in the US, push against this industry. And, I think the SEC has been very clear that there's maybe not even a future for the industry in the country. Yet we have institutional players, BlackRock, Fidelity, Deutsche Bank has filed to be a crypto custodian, distressed debt investors who are making plays on FTX and other bankrupt crypto company assets, who seem to still think there's a future for this industry, that there's still money to be made, that their clients at least want access to these markets. And so there's this really fascinating tug and pull between regulators who either don't want to deal with this or setting very arbitrary laws. Coinbase obviously has been fighting with the SEC for I don't even know how long now, but it's been that kind of no holds bar type fight, and that would typically scare away a big, massive, risk-averse company like BlackRock, and they've kind of gone full bore into it. And the SEC still, with players like BlackRock, players like Fidelity, interested in the space, is still taking its sweet time in getting to anything resembling a crypto-positive regulation, which. And we've reported this as well as Semafor. It's pushed these crypto companies to look abroad. We've obviously seen VCs go to London. Binance is obviously been pushed to different parts around the world as we've reported, whether that's Paris, where it's now not as welcome anymore, or the Middle East, or different parts in Asia. And so if you're a venture capitalist in the US looking to invest in crypto companies, you're probably looking outside the States right now.
Well, the absence of an asset approved by the SEC for institutional investors to really just pour funds into, will that lead to a further decline in the crypto reaction that we see in some of the more traditional large coins, Bitcoin and Ether or Ethereum, or whatever the household debate is at some of those levels?
Yeah, I think the actual coins themselves have become so entrenched in a lot of U.S.-based investors' portfolios, but also global portfolios, that I don't know how much a spot ETF from Fidelity is really going to matter to a global investor who wants that exposure into their portfolio. There's obviously going to be ways for them to access the big major coins. I think what a lack of regulatory agreement between the industry and even some of these large institutional players will mean is that new startups, new innovation in Web3 and new innovation in crypto is not going to happen necessarily in the States if this is the path that regulators take. It's going to push them to Southeast Asia. It's going to push them to the Middle East, and I think for a lot of venture capital investors, at the very least, that is the trend they're monitoring more so than will Fidelity ETF change the price of Bitcoin day to day.
Hey, Brad, it's Julie here. It's so interesting to me, this moment in time with these institutional investors making these filings at the same time that CZ is sort of bunkered, as you put it, right, in the Mideast. And as you have the SEC pushing back against all of this, I mean, when you talk to institutional investors, where is their interest in this coming from at this point? Because it does seem like, because of the scandals and just popular discourse, has been less crypto friendly. So it's interesting that they're sort of trying to make inroads now.
Yeah, I have been, I guess, surprised at some points too, because you see kind of like the leading figures in the industry continuing to get in trouble, whether that was SBF last fall or CZ now, where there is scandal kind of swirling around the people that you put as like, the Jamie Dimon of crypto or the Warren Buffett of crypto. At the same time, I think these institutional investors are being driven by their clients who, whether they believe in the blockchain technology or just want to have access to this market and don't want to miss out on pretty significant gains, they're responding to their clients' demands. And right now their clients are saying, we don't know what this is, but we don't want to miss the train. And we trust that these big institutions can do this in a risk-averse way, or at least a way that minimizes some of the risk on us, so we don't have to invest directly into even maybe they are investing directly into a Bitcoin or Ethereum, but we don't have to invest directly into whatever is the big crypto startup of the day. We can invest through a fund. We can invest through a kind of managed portfolio where you trust that the people at these institutions know what they're doing. And then in turn, that requires institutions to find people who are knowledgeable about the industry, who are interfacing with regulators and understanding what the risks are, and who are looking most likely outside the States.
All right. Bradley Saacks, Semafor finance reporter from One Bradley to Another. Great to have you here with us today. Appreciate it.